Okay, hello everyone. This is Miltos from Futex, and I will be going through the weekly trading roadmap for the week starting the 9th of February 2015. It's currently 10 o'clock in London on a Sunday night. We've had a few things that have come out, and I'm just going to go through some of the event-driven risks that we might see this week and some of the trading opportunities that may arise from them. So, just to get us started off, we've had some pretty interesting headlines that have come out of Greece, and they've come out just today. Basically, the Prime Minister Alexis Tsipras spoke to the Greek Parliament for the first time officially, and really, just to go through some of the main headlines that we saw, uh, you can see here. I've just taken some of the main ones that are important. So he said Tsipras uh, says that the government will make Greece economically autonomous. He also said Greek government won't ask for a bailout extension and that they want a bridging deal until June. So to give us a chance to kickstart development. So the main outtakes and how it's very easy to see um, how to read this in layman terms. We will not back down and we reject the bailout extension. So by rejecting the bailout extension, um, Greece effectively or implicitly, um, there's a Grexit or a Greek exit from the Eurozone on the table, unless the Eurozone folds. Now, somewhat all of these things are within a realm of expectancy. Uh, Obviously, they were elected based on these mandates, so you wouldn't really expect them to go back down straight away. And like we've been saying all along, this is going to be just a very high stakes poker game between Greece and its creditors, being the Troika, the IMF, the EU, and the ECB. Um, so we've already seen out of the ECB, they've removed the waiver so that Greece could use its debt as collateral. So we saw a few market moves on that. So just based on that, I think the market is basically taking it as if anything that's increasing the conflict or um, let's say the inertia of let's say some sort of deal, it's increasing sort of the investors' uncertainty. And that's what's kind of driving volatility and a few of the market moves that we've been seeing as of late. So coming into Monday, there's not a lot of event-driven risks with regards to data points or any central bank speakers. So really, I'm just going to go through some of the market structures that we can trade just based on this news, because I feel tomorrow will probably primarily be driven by this news, as we saw um, on Thursday, where Wednesday night we had the headlines from the ECB. So Thursday morning we actually had some good volatility in the in the EU session. So coming into tomorrow and taking a look at the Eurostox 50 on a weekly time frame for the market profile, and I just want to expand on what we were talking about last week. I know this is a little bit bunched up for you guys to see, but I've highlighted the key levels that I'd be looking at. So this is last week's profile. So this is last week's profile. This is 2 weeks ago profile that we mentioned last time. And the value area was between these 33.42s, 44s, all the way up to these 33.82s to 88s was the key levels, the key regions that we were looking at. Um, and last week we basically left a value area from 33.87. Um, I can't seem to see what this level is, but in any case, I think primarily what we should be looking at coming into tomorrow, you know, assuming we do gap down, we open with a gap because we did actually close. We had a pretty weak um, after after our session. So the all of the EU session and all of the US session through NFP, through the jobs numbers, we had the Eurostox actually holding a bid quite nicely, and we couldn't really break below this 84s, 85s area. And we saw this area uh, generally being a good decision zone. So we saw this very big chunk of value being built in here, as you can see in here, with the profile being making a very large belly. And then last week, we've made our way to the other side of value, and then, you know, subsequently posted a lot of time value above this value area. So our value area here is basically directly above 2 weeks ago. Um, its value area. So really, for me, looking at this, the way this profile is structured, we close in this region right here. As you see, the closing prints right in here, and this level is the 3382s. This is the 3387s. In this region here, I would expect there's about a 70 to 80% chance, maybe more, that if we do open in this region, we're going to test this area. So this, for me, is really our decision zone. Um, Basically, if we're looking uh, to trade within 2 weeks ago, the value area that we made 2 weeks ago, I'd expect once we get into this area, or if we do puncture our way back inside, really our last port of call is last week's VPOC, or highest volume traded. But I really do think in this area, if we do find an offer, we could just rotate back down and maybe fill in this area. Now, on the contrary, if we do just zip through this area, leave a lot of low volume, just basically, indicating that no one's really willing to step in the way. And actually, this was just a great fill for a lot of the buyers that want to step into the market, which is a very likely scenario given the fundamental background that we have. In that case, then we could see this market just vacuum its way, or just auction up in this area. At the minute, we've been given a lot of bullish signals. Obviously, it's in a very technically bullish structure. If we look at the daily structure in here, I can't seem to get that perfectly. But if you look at the daily structure in here, we're kind of forming this bit of a wedge pattern with a flat top. We've had this double top here at these 3430s. We kind of inched through by a tick on this high right here, but it's basically a double top as it stands. So a lot of pressure building up into this area. So technically, if we do open lower, I think our decision point would come just through this trend line in here, around these 82s to 87s. So really that's where you want to be looking at, because if we fail and post a candle that's below this trend line, then we could get some continuation to the downside and possibly test the other side. With respect to just technical structure, this is just a range between here and here. Very, very simple stuff. You don't really want to overcomplicate it. So if we do break to the upside, we should be expecting a move higher. If we break to the downside, I wouldn't expect a follow through, because we still have a lot of support on this bigger time frame structure. But again, if we do pierce that, we could see some weakness. And I think keeping this quite simple is very important, especially around news events. So that's our structure in the Euro stocks. In the Eurodollar, the structure is not as I think as simple. It's been quite nice last week. We covered the large amount of coiling that we had in this market. We saw a break to the upside, which put some pressure on the shorts. But we've had a lot of strange candles here. Very strong candle here, weak candle after that, engulfing up to the upside, and then another engulfing to the downside. But overall, if you take it from the beginning of the week, we've actually posted a fairly weak doji. So the open of the week is just here at 1314s. I think the close of the week is at 1315s, so just a tick above. And overall, this area right here, basically 113.14, 15 area, give it about a 3 or 4 tick tolerance. That is going to be your decision point come into next week. So as of now, I think we're trading slightly lower, so we've already broken this inside day structure. But come the cash session, I would suspect, again, this is going to be a bit of a decision point. Whether we'd like to hold lower and auction to the downside, I think the sellers are going to show their face here. If they're not strong enough to hold off the buyers, we could just trade higher. But again, given the weekly structure, we actually posted a pretty weak candle last week. So if we do get some bit of selling pressure, we could easily auction given the trend that we've had as of late. Moving on to Tuesday, um, basically the data points as it stands: the UK industrial and manufacturing productions month on month. We've got the ECB's Costa, Pret, and Lacquer, uh, Dove, mid, sorry, excuse me, middle, and a voter slash hawk, respectively. So nothing really that I wanted to point out with regards to market structure and how we could trade it. Come Wednesday, we have the DOE U.S. crude oil inventories, the Fed's Fisher, a non-voter hawk, will be speaking on Wednesday, and with regards to geopolitical um, risks, we have the Eurogroup meeting, which we should be keeping a very close eye on Eurogroup meetings and any of these sort of EU Commission meetings, because we could get comments, and these comments are moving the markets with regards to Greece at the minute. With regards to market structure, nothing really that specific I want to point out. This is a weekly, or sorry, daily candlestick chart of the WTI crude oil market. As you can see from last week, we actually found a very decent bid following this bit of a false break to the downside, and we closed back inside this kind of structure. So we're getting quite weak. We noted how on this way down we had very little volume, very light on volume, and that's really not what you want to see when you're following the trend. We saw this little false break to the downside, back up, and this day basically engulfed all of these days of trading. We saw a pretty strong bid. So this actually, I don't have a weekly time frame, but it's the first time in a while we've had two, um, reasonably. In the last 3 weeks, we've shown some signs of buying, and this is a pretty decent week to the upside. So I would imagine in this area we could just continue to auction. Again, I'd be looking at these levels, 54.66. We've seen a lot of resistance in there. If we could auction to the upside above that, again, this kind of trend line going all the way back to the beginning of October could offer some sort of resistance, but just keep a close eye on it, whether it does actually offer any sort of resistance. And again, to the downside, again, we're looking at 47.26 and the recent lows, 44.20. So, moving on to Thursday. Thursday is the busiest day of the week. German CPI final, not going to be extremely market moving, but just something to keep your eye on. U.S. initial jobless claims as usual. The biggest data point for this week probably is the U.S. retail sales, which has shown actually a bit of market volatility. That was actually the figure before we got those extreme moves. I think it was on October 15th or 16th. Those very, very large moves in the US T-note. We had a lower reading than expected. So again, you want to be looking at this figure because, the US is basically, at the moment, the only economy that's showing any promise um, for the near to medium term with regards to growth. And they're obviously 70 to 80% consumer-based economy. So you really want to be keeping a close eye on the retail sales, consumer confidence, whether these lower oil prices are going to actually give a kick to the U.S. consumer. It's expected at minus 0.3%. So if we do get a reading that's higher than than zero, that would be ideal. Obviously, psychologically better. Investors would take that a little bit better. And we'll take a look at some of the market structures regarding that. But first, we'll look at, with regards to the main event of Thursday, we've got the BOE quarterly inflation report. Now, currently, where the market expectation is sitting, we're looking at a rate hike in about Q4. Sorry, that's a mistake. It's Q4 2015, not 2016. But the OIS market, the swaps market, is priced in for the beginning of 2016, so a little bit more dovish than the futures market. Um, but what's really important is that the market, and this is what I wanted to highlight, is disproportionately more sensitive to hawkish surprises in this event. So overall, we've seen a very weak pound. We've seen very strong gilts as of the last 6 to 7 months. Um, And overall, the market's just priced in very, very dovishly at the minute. Obviously, with the backdrop of very low inflation, subdued inflation, and growth in the eurozone. Eurozone is obviously the UK's biggest trade partner, so that's where you're getting these kind of moves from. But if you do get these policymakers firmly reminding the market, which Carney has done before, that they are intending to normalize sooner than the market expects, we could see some swift unwinds of some of these dovish bets, i.e., stronger pound and weaker gilts. Now, looking at some of the market structures, firstly, as we are just talking about this now, I'll go through first the UK 10-year gilt, which very interestingly, you can see last week we saw an immense move in the yield to the upside. So you can see here we made a low basically 2 weeks ago at this yield of 133.4, and since then, we're now trading at 164.7. So it's a very big move in the yield last week, and similarly also in the U.S. U.S. has also seen a very, very large move in its yield. Last week we saw a very weak T-note. Um, this has moved, um, what, 20 odd, 28 basis points in just 1 week. So that's a very, very, initiative type move that we're seeing here. So with that backdrop, there actually has been some sort of weakness in the gilt market, but I think maybe the biggest bang for your buck is going to come on the pound, because if you look at the larger time frame structure of the pound, this is a weekly chart of the pound. We've been going through this week after week. You can see we've had this bit of consolidation after we've broken out of this larger time frame structure. We posted a low at 149.48, and we're currently around 152. And as it stands, if you just zoom in on that and look at this on a daily structure, we actually have a bit of a like inverse head and shoulders formation on a daily, which we've actually already broken, and we're currently sitting just below that larger time frame um, support turned resistance. So we broke through it. We actually closed below it on Friday. Now it's going to be quite important. This neckline for me is going to be the decision point, or the line in the sand. Usually the best lines in the sand are straight. It's just a one level line in sand within a few ticks of tolerance. But I think the market, at least the technical traders in the market, which in the FX market you do expect a lot of technically driven flows. I would imagine that around this neckline we're going to see a bit of a decision point. So definitely keep an eye on this. From this point, I can't remember off the top of my head what the break is, but we're expecting from the break, you could see from the top of this head and shoulders down to the head is about 320 pips. So that would comfortably sit us around the 155 area or mark. So if we do complete this pattern, we're going to be well back inside. I think it does actually technically make sense from a structure perspective. You can see in here is quite a bit of consolidation and market value. And in here there's been a bit of a vacuum. So if we do actually find a bid, it does seem as if this market could easily have that move to the upside. So again, definitely keep a close eye on this. I think this will probably give you the better bang for buck. I mean, I'm not sure come into Thursday if we're still going to have this structure. This is obviously, on a Sunday we're talking about the structure, so give it 3 days of tolerance. But if we do have this structure still intact, I could see this being a good bang for buck situation. So keep a close eye on that. Friday, nothing really. We've got the Fed's Fisher speaking. There's not really any data points or any sort of central bank speaking. And then from a risk and money management perspective, I've kind of just highlighted the event-driven risks of the week as I do every week. And it's very clear Thursday is the most busy day of the week. So allocating a little bit more risk to that, 35% of your risk allocation for whatever it is for the week. Possibly put 35% of your chips on this day. Monday, obviously, with the news over the weekend, we could see some good market moves in the EU session. So I think maybe put a little bit more chips on Monday. Tuesday, Wednesday, and Friday, a little bit more quiet, but always leave space. You just never know what could come out. This is just purely how theoretically I would put my risk plan into place. So this is very, very much discretionary. This very much depends on your trade plan, on how you see your best edge. If you are an event-driven risk trader, then yeah, definitely put more chips on Thursday. If you think you feel you're more technical and you see better technical setup on Tuesday or Wednesday, well then, by all means put 50% of your capital there. Um, but really, it comes down to where you feel you have your edge and where you feel you're going to make the biggest bang for your buck. That's my event-driven risk slash weekly trading roadmap for this week. Hope to hear you guys or see you guys next week. Thanks for listening, and I'll be with you guys again on Friday with my weekly market wrap. Happy trading for the week and good luck. Take it easy.